Meet. Are we all here?
Not yet, sir.
Okay. Okay.
Good morning, sir.
Morning.
Good morning, sir.
Good morning. Okay, so I think we can start. Can you guys see my screen?
No, sir.
Not yet. Share screen. About that.
Okay na, sir.
Okay, so thank you for coming to this class, and I saw you guys earlier with Miss Nora. So congrats for getting this far in your course. And today we'll be just going over some refresher items in the previous subjects that you've taken. So you can type in your comments, reactions, and questions in the chat box as we go along. Okay. So again, my name is Raymond Vasquez, and I'll be handling this refresher classes until Friday. All right. So let's start. So this will be about financial statements. Okay. So let's just go over the financial statements. So, to you or for you, what are financial statements? Or as far as you can remember, how do you define financial statements? Or when you say financial statements, what comes to mind? Can you guys type in the chat box or maybe just answer live by turning on your mic? I'll wait for you to type your answers or answer. Okay, Erwin says the first thing that comes to mind would be transactions. How about the others? Financial statements
It's,
contains.
uh,
Mm-hmm. Go ahead.
it's more in financial activities, sir. The cash inflows and the outflows. No, that, na transact sa business.
Okay, so financial transactions in the business. Then somebody says it contains the business activities. Some said formal records of the financial activities of the business. Okay, how about the others? How do you define financial statement? So if someone asks you, what's a financial statement? What would you say? It relates to financial performance of the company. Yes, one financial statement relates to the performance of the company. It's written records of financial activities and performance of a business. What else? Okay, so financial statements are means by which the information accumulated and processed in financial accounting is periodically communicated to the users. The financial statements are the end product or main output of financial accounting process. Okay, so once you summarized everything, you've processed all the data, all the documents, processed them, recorded them, you summarize them, you produce a report you call financial statement. So it's the end product or the main output of financial accounting process. So yes, somehow all the records, it will become uh, it will have a summary that we call financial statements that has all the information already accumulated and processed in it. Okay. So what are the general purpose financial statements? Ano ba yung general purpose financial statements na yan? What do you remember about that? When you say general purpose financial statements, meron pa lang financial statements na for a specific purpose. What do you think, guys? What are the general purpose financial statements? Just type in your answers. What do you think, guys? You can turn on your mic or you can type in the chat box. Let's wait for a bit for you to be able to type your answers. These statements are income statement, balance sheet, statement of cash flows, statement of shareholders' equity, and any accompanying disclosures. Provide information about the results of operations in the company. What do you mean by general purpose? What does the general purpose here mean? Issued by the management at regular intervals. But what is really a general purpose financial statement? Or what makes it different from all the other statements? Why is it called general purpose? For broad group of users. Yes, correct. Justin Bagara. Okay, general purpose financial statements are statements that have been prepared for use by those who are not in a position to require an entity to prepare reports tailored to their particular information needs. So it's for a broad group of users. Okay. So financial statements objective is that to provide information about the financial position, financial performance, and cash flows of an entity that is useful to a wide range of users. Okay. How about the financial reporting objective? What is the financial reporting objective? What can you remember? This is the financial statement objective. How about the financial reporting objective? What do you remember? To analyze and report business income, to track, analyze, and report the business income. So, what is the financial reporting objective? To provide useful information to the users of financial reports. Okay, so this should be useful from number of perspectives, such as whether to provide credit to a customer, to whether to lend to a borrower, and whether to invest in a business. It's also to provide information about the cash flows to which an entity is subjected, including the timing and uncertainty of cash flows. And it's also to disclose the obligations and economic resources of an entity. There should be an emphasis on the changes in liabilities and resources, which can be used to predict future cash flows. Okay? How about limitations of financial reporting? What do you remember about the limitations of financial reporting? Okay, let's wait for a bit for you to type your answers in the chat box, or you can open your mic and then answer me directly. What do you remember about the limitations of financial reporting? What do you mean by limitations of financial reporting? What are the limitations of financial reporting? What do you think, guys? Derived from historical costs? What else? Its specific time period. It is generally quantified and expressed in units of money. The FS may not be comparable. What else? So that's from Pearl, from Roshana, and from Pearl again. How about the others? Only cover a specific period of time. Okay, what are the other limitations? Thank you, Justin. Do not give exact position. Thank you, Diana. What the others? Okay, so some of you have listed the limitations. So these are some of the limitations of the financial reporting. Why is it a limitation to have historical if it's derived from historical costs? Because you don't know if the historical cost is also still applicable, relevant at the time, right? So depending on your purpose of you looking at the financial reports. Another limitation would be that financial statements are not adjusted for inflation because it's only, especially in the balance sheet, it's only measured at the end of the period. And if it's an income statement, it's measured according to the standards, could be measured using the could be the average of or the time at which the transaction happened. Financial statements do not contain some intangible assets. It's correct, right? Because we only report those that can be both measurable, all right, and um, it should be measurable, okay, and that you can actually ascertain the amount of the asset, okay, and you cannot just create any intangible asset, okay, to be reflected in your financial statements. So that is one of the limitations. You know your employees could be an asset for the company, but you don't value your company's employees, right? So all other intangible assets that we cannot reasonably measure, we cannot record. Okay, so it should be both um, measurable and at the same time it is probable at least that you can it is probable that economic benefits will flow to the entity so that you can measure those assets. Financial statements only cover a specific period of time, and yes, that's one of the limitations because it's for a specific period of time. It's prepared from one date to another date. Okay, so if you are looking at the entirety of the transactions from when your company started, you'd have to go back and look at all the financial statements for each period. Okay, because financial statements are usually prepared only to cover a specific period of time. And another limitation would be that financial statements may not be comparable, especially if they are using different uh, standards, professional judgment, and treatments. Okay, financial statements could be wrong due to fraud. That's correct. You will only be able to identify fraud if you obtain sufficient evidence to uh, to contest the amounts presented in the financial statements or to even just examine the veracity of the information found in the financial statement. So that's also a possibility and that's a limitation. Financial statements do not cover non-financial issues, and that's also true because there could be issues, but because they do not have financial impact, they are not in the financial statement. So that's a limitation, right? Financial statements may not have been verified. Yes, especially if it's an audited, okay, and just pulled out from a system. And financial statements have no predictive value. Yes, no predictive value because what are our financial statements? We have the balance sheet, the income statement, statement of cash flows, changes in equity, and then um, we have the notes to financial statements. We do not have forecasting and budgeting reports there, so it has no predictive value. All right. So yeah, those are the limitations of financial reporting. So again, what are the components of a complete set of financial statements? As I've mentioned, do you still remember or can you recall? Can you type in the chat box? What are Again, my question is what are the components of financial or complete set of financial statements? You can type in your answers in the chat box or you can just mention them here as you turn on your mic. Assets, liabilities are elements of financial statements. So, what are the components of a complete set of financial statement? Okay, balance sheet. Mm-hmm. What are other components? So, revenues and expenses. Where can you find that? Cash flow, yes, Claire. Income statements, yes, Regine. What else? What are the components? Statement of changes in equity. What else? Statement of retained earnings. Okay, about the others. Notes to financial statements. Okay, so the components of a complete set of financial statements would be statement of financial position or balance sheet, statement of financial condition or income statement, statement of comprehensive income, statement of changes in equity, statement of cash flows, and the notes to financial statements. It comprises a summary of significant accounting policies and other explanatory information. Okay, so what are the responsibilities for financial statements? The management of an entity has the primary responsibility for the preparation of present and presentation of financial statements of the entity. It is their responsibility. Okay, and in the financial statements issued by the management, they actually sign that statement of management responsibility. It's not the auditor's responsibility. Okay, it's the management's responsibility for the preparation and presentation of the financial statements of the entity. The board of directors, in discharging its responsibilities, reviews and approves the financial statements before these are submitted to the shareholders of the entity. Okay? So, what is the management's accountability for the financial statements? What's the management accountability? Can you still remember? And this is important so that you also understand whether you're taking the board exam or you also are in the practice of accounting. You will always have to know this. So, what can you remember about the management accountability? If the management of the entity has the primary responsibility for the preparation and presentation of the financial statements, what's the accountability of the management really? Okay, you can type in the chat box your answers or just turn on your mic. By the way, you can just you can actually answer and if you're wrong, it's okay. It's better to be wrong here than in the board exam or in the actual work. No? So what's the accountability of the management? Okay. So the management's accountability is really about the safekeeping of the entity's resources and for their proper, efficient, and profitable use. The shareholders are interested in information that helps them to assess how effectively management has fulfilled their role, as this is relevant to the decisions concerning their investment and the reappointment or replacement of the management. Okay, so it is important that the management is actually doing the safekeeping of the entity's resources as well as the proper, efficient, and profitable use of those resources. Okay? Okay, guys, can you still remember the general features in the preparation and presentation of financial statements? Can you type in your answers in the chat box or just mention your answers by turning on your mic? What are the general features in the preparation and presentation of financial statements? What are those basic principles that we follow? What are those features, again, in the preparation and presentation of financial statements? There are several of them, guys, and I would really think that you know these features in the preparation and presentation of financial statements. You can give it a try. I'm sure you're all familiar with it. What are those principles underlying the preparation and presentation of financial statements? Are you still there?
Yes, sir.
Okay. So what are those principles? Comparative information. Thank you. Offsetting, accrual basis of accounting, going concern, materiality, integrity and accuracy of financial statements, fair presentation and compliance with IFRS. Okay, so we have those answers from Claire, Priya, Regine, Erwin, Vicente, Reno. Thank you so much, guys. So yeah, those are the features of general features in the preparation and presentation of financial statements. One of the features would be the fair presentation and compliance with PFRS, and that is the reason why when we do our audit, in the unqualified opinion, we actually say that the financial statements presents fairly and what it purports to be, because it is supposed to be fairly presented. Okay, fair presentation and compliance with PFRS. Another feature would be going concern, that the business is going to continue to operate in the future days indefinitely. Okay. Um, Accrual basis of accounting um, is a rule, right? And it really is important that you know this, that accrual basis, and we know that accrual basis means that revenues or income are recorded at a time when they are earned and not when they are actually paid or the payment is received. Um, in the same way as expenses is recorded at the time that they are incurred and not at the time when they are actually paid to the suppliers or to the vendor. Materiality and aggregation, okay, we know that, and in order to simplify our financial statements, we are actually doing the materiality. And in our audit as well, we no longer focus on the immaterial or insignificant items, even if they are presented. And aggregation of material, if it is so material, it should be one line item, but if they are immaterial, they could be lumped into one line item and just summarized. Offsetting, okay, for some accounts that we allow offsetting, and some accounts we do not allow offsetting, okay. Frequency of reporting, depending on the period that we have set, or as could be set in the articles of incorporation or by the bylaws or the management's internal management policy. Comparative information that is also related to consistency of presentation. It should be consistent so that it's comparative, and that it's also comparative when it uses in the presentation of the financial statements, the generally accepted accounting principles, and the Philippine Financial Reporting Standards or PFRS, or the Philippine Accounting Standards or the PAS, whichever is applicable, so that they are comparative. If they are not using the same rules or standards, they cannot be comparative because they may be having different treatments. So it is important that they are using the same standard so that they are comparative. Apple to apple, kumbaga. Okay. Okay. So, in the fair presentation and compliance with financial reporting standards, okay, the fair presentation and compliance with Philippine financial reporting standards shall means that it shall fairly, okay, present the financial position, financial performance, and cash flows of an entity, and that it is achieved if the financial statements are prepared in accordance with the PFRS, which represent the GAAP in the Philippines. Okay. For fair representation, it is defined as the faithful representation of the effects, okay, of transactions and other events in accordance with the definition and recognition criteria of assets, liabilities, income, and expenses laid down in the conceptual framework. Okay. So the fair presentation of an entity requires what? What in order to fairly present the financial statements, what is the requirement for the entity? Or what are the requirements? Could be what are the requirements? Okay, wait for your answers, guys. Give you some few minutes. Could be complete, neutral, free from error, faithful presentation of effects of the transactions. What else? Thank you for that, Justin. Okay, and Regine, how about the others? Okay, so in the fair presentation of an entity's of the entity requires that the entity select and apply accounting policies in accordance with the PFRS. This is usually in the notes to financial statements stated what are the accounting policies that you are employing in the presentation. Okay, and to present information that provides relevant, reliable, comparable, and understandable information. Okay, and to provide additional disclosures necessary for the users to understand the entity's financial statements. Adequate disclosures dapat. Okay, adequate disclosures. Okay, as I mentioned earlier, how would you describe or how would you define going concern again? Or what does it mean when you say this financial statement is presented underlying the assumption of going concern? What does it mean?
Sir, may I answer?
Yes, go.
Ano, sir, the assumption of the business, ay, basta ang assumption na ang business mag-operate yapon in the near future.
Okay, there is an assumption that the business will operate or continue to operate in the future or indefinitely. And what is the impact of that assumption to your financial statement? Do you have any idea, Regine or anyone else? What's the impact if there is an assumption of going concern, meaning that you assume that that the business is going to continue to operate in the future indefinitely? What is the impact of that in the presentation of the financial statement? What is the effect? When you say it's prepared or presented with the assumption of going concern. Okay, so for going concern, as mentioned by Regine earlier, the entity is viewed as continuing in operation indefinitely in the absence of evidence to the contrary. The financial statement shall be prepared on a going concern basis unless management intends to liquidate the entity or to cease trading or has no realistic option but to do so. If the financial statements are not prepared on a going concern basis, such fact shall be disclosed together with the measurement basis and the reason therefore. So the impact of going concern is that the valuation of your assets, liabilities, and other elements of financial statements is on a liquidating concern so that it only measures what is realizable already because it's already winding up or liquidating the business. But in the absence of such disclosure of any other measurement basis, the underlying assumption would be that it is prepared under going concern basis unless there is a different assumption employed in the presentation and the preparation of the financial statements. Okay? Next, how about accrual basis of accounting? Again, what is accrual basis of accounting? Anyone? What is accrual basis? You can type in the chat box or you can just mention it by turning on your mic. Guys, you're there?
Yes, sir.
Okay, so where revenue or expenses are reported, as Justin said, revenue or expenses are recorded when a transaction occurs rather than when payment is received or made. Or the concept of recording revenues when earned and expenses are incurred. Okay. So when you say accrual basis, under this accounting basis, the effects of transactions and other events are recognized when they occur, okay, and not as cash or cash equivalent is received or paid. So these are recorded and reported in the financial statements of the periods to which they relate. So that's right, Erwin and Justin. Thank you for that. How about materiality and aggregation? What do you understand of materiality and aggregation, or what can you remember about this in the presentation preparation of financial statement? Okay, so materiality and aggregation, an entity shall present separately each material class of similar items, and an entity shall present separately items of dissimilar nature or function. Okay. Okay. Yes. Thank you, Priya. Um, of dissimilar nature or function unless they are immaterial. And materiality provides that the specific requirements of PFRS need not be met if the resulting information is not material. So you can deviate if it's not material because it should not. When you say it's immaterial, it will not affect any economic or business financial decision of the um, users of the financial statements. How about offsetting? What can you remember as a standard or rule in the presentation concerning offsetting? What do you think, guys? What is it? Okay, I'll wait for you a bit. Give you one minute. type your answers or just answer using your mic. How about offsetting? What does it mean? Okay, Justin says with offsetting, you show your company's assets and liabilities on the balance sheet on a net basis. How about the others? Okay, so when you say offsetting, okay, it's that assets and liabilities and income and expense when material shall not be offset against each other. And offsetting may be done when it is permitted by another PFRS. Okay, so that's a very important to note that assets and liabilities and income and expense when material shall not be offset against each other. Using this line, you can offset only if they are immaterial. Okay? Okay, next. Frequency of reporting. Okay. For frequency of reporting, an entity shall present a complete set of financial statements at least. This is the minimum requirement annually. So do not be mistaken. It says at least annually, but you can actually present your financial statements on a monthly basis, on a quarterly basis, semi-annual basis, and then at the very least annual basis. When an entity changes the end of its reporting period and presents financial statements for a period longer or shorter than 1 year, an entity shall disclose one, the period covered by the financial statements, and two, the reason for using a longer or shorter period, and three, the fact that the amounts presented in financial statements are not comparable, and not entirely comparable because, again, they have deviated in the period. Okay? Okay. Okay, so with that, what do you think is comparative information? What does it mean? Comparative information. We actually have other people here, so I should be hearing from all the others. Honey, Lendon, Reno, Shanzi, Claire. What do you think is meant by comparative information? Okay, so Regine says a document used to compare a particular financial statement with prior period statements. What is meant by comparative information? How about the others? Are you there? Okay, Erwin said the amounts and disclosures included in the financial statements in respect of one or more prior periods in accordance with the applicable financial reporting framework. Okay. Okay, so when you say comparative information, the financial statements of the current period shall be presented with comparative figures of the financial statements of the preceding period or year. Okay, so depending on the period, right? So that's comparative information. Okay, we have last two. What about the consistency of presentation? What does it mean? What do you remember about consistency of presentation? Guys, there. What does it mean? Consistency of presentation. Okay, it requires that the accounting methods and practices shall be applied according to Regine, shall be applied on a uniform basis from period to period. Okay, so thank you, Regine. Consistency means that the presentation and classification of financial statement items shall be uniform, okay, from one period to another. And any change is allowed when it is required by another standard or when a significant change in the nature standard or when a significant change in the nature of operations of the entity will demonstrate a more appropriate revised presentation. Needless to say, with this provision of consistency of presentation, since it should be uniform, that when you change something, it should be disclosed to the users of financial statements or financial information that there is actually a change, okay? Because it affects the comparability of the information. And at the same time, it cannot be just by a whim or it cannot be a whimsical action or decision for the preparers of the financial statements. The reason should only be should for the change should be that when it is required by another standard or when a significant change in the nature standard of standard or when a significant change in the nature of operations of the entity that will demonstrate a more appropriate revised presentation, meaning that it's no longer appropriate for you to present it that way and therefore you can no longer be uniform to the previous year or previous period of presentation. That warrants, that allows you to change the manner of presentation, the treatment, okay, of the financial information. All right? And the last thing would be identification of financial statements. What does it mean, identification of financial statements? What can you remember? By the way, Juan Vicente also answered earlier. Yes, thank you. Pearl also answered. Erwin John, thank you. That is correct. No, it's a very good one from Juan Vicente. He said that Israel, the presentation of financial statements should only be changed. The presentation provides information that is reliable and is more relevant to the users of financial statements, and the revised structure is likely to continue so that comparability is not impaired. That is correct. That's what I mentioned earlier. So that's good. And Regine says, for identification, I guess that she's already saying the financial statement shall be identified clearly, correct? What else? When you say identification of financial statements. It should be distinguished from other information in the same document. Thank you, Justin. And Juan Vince says the financial statement shall be identified clearly and distinguished from other information in the same document. Thank you, Juan Vicente. Yeah, so you're right. That's actually identification of financial statements that should be clearly identified. The following information shall be prominently displayed and repeated when necessary for the information presented to be understandable. Okay? So the name of the reporting entity, that should be important. That is very important, the name of the reporting entity. whether the financial statements cover the individual entity or a group of entities, the date of the end of the reporting period or the period covered by the financial statements, whichever is appropriate to the related component of the financial statements, the presentation currency, the level of precision used in the amounts in the financial statements. So when you say it shall be clearly identified, these are the features that needs to be there, the name of the reporting entity. That's why in your first year, in your financial accounting one, when you did your balance preparation of financial statements, there is actually a requirement for you to identify the company, right? You have to write the name of the entity at the top. Okay? And the period covered, right? You will say for the year ended December 31 or for the I or as of this date, okay, to identify, okay, the period. The date of the end of the period, okay? That is important. The presentation currency, that is why maybe some of your instructors or professors previously would not accept an answer only in numbers. It should have a peso sign, right? We even have that rule of double rule if it's the final amount, right? So you have that, the presentation currency and the level of precision used in the amounts of financial statements. So that's your identification of financial statements. Okay, so for next meeting, I will be having a pop quiz, which you can also answer, and then you can read in advance, maybe include in the quiz statement of financial position. So we'll have a thorough discussion on that. I think that's it for now. We're just in time. We're just going to wrap up in a few seconds or minutes. That's about it for me, unless you have any questions, guys. And before you leave, you will take a picture for documentation purposes. I'll just wait. Toot. Mhm. Are there any questions? I'll start presenting. And then you can turn on your camera. I'll turn mine on. So show your beautiful and handsome faces, guys. Okay. Let me just take a screenshot. Okay, again. Again, smile. Can we have Lendon, Erwin, John Pilonio? Turn on your camera. Okay, smile. Okay. Thank you very much, guys. Do you have any questions? Okay, if you have no more questions, I'll see you next meeting. Thank you so much for coming to this refresher class today. And have a good rest of the day. Bye-bye.
Goodbye, and
Bye-bye.
goodbye, sir.
Bye-bye.